So Amazon is not only the world's biggest e-commerce player, but also one of the world's most recognized brand names, and its stock's 161,000% gain since going public in 1997 is legendary. Moreover, Amazon changed the world by normalizing and then setting the standard for online shopping. But the rest of the world's retailers are all ultimately taking aim at Amazon. So there is no denying that Amazon is running out of ways to sell more consumers more stuff. And a quick look at its stock price shows no real moves since almost 1 year. So in this video we will break down exactly whether Amazon's stock is still worth it and give you a prediction at the end. But before we jump right in, just make sure to hit that subscribe button down below. If you never want to miss opportunities like this, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, so to accurately predict Amazon stock's future, we have to take a deeper look at the business model behind it. And although the low-hanging e-commerce fruit has all been picked to be sure, there's still plenty of room for growth. Digital Commerce 360 estimates that only 21% of last year's retail sales in the US were made online. There's another 79% worth of roughly $4 trillion in consumer-driven business up for grabs. And as Amazon has an enormous budget on its side, it will most surely win one of the biggest parts of those 80%. The company's coming 20 years, however, will be less about its continued e-commerce dominance and more about all the other ways it can leverage its size. One of those ways is even more growth of its cloud computing business. An incredible $45.4 billion worth of the company's 2020 revenue of $386.1 billion was attributable to Amazon Web Services. That's roughly 12% of its top line, up from the previous year's web services sales of $35 billion. Far too overlooked, however, is how stunningly profitable Amazon Web Services is. More than half of 2020's $22.9 billion in operational profits came from its cloud computing service arm. And there's still a massive amount of room for growth. Technology market research company Gartner predicts the worldwide public cloud computing sector will grow 18% to $305 billion this year and then grow another 19% next year. However, cloud computing isn't the only growth engine Amazon is tuning up outside of its consumer-facing business. The company is also refining its online presence as a means of selling advertisement space. During the fourth quarter of last year, Amazon collected nearly $8 billion worth of advertising revenue, up 64% year over year. For the full year, the company did over $21 billion worth of this other business. Revenue isn't profit, of course, but this advertising business is being built around properties and technologies already in Amazon's portfolio. That makes it a low-cost way to enhance the profitability of an operation that's already in the black. In the meantime, Amazon is still courting the same consumers it already serves to make them more frequent customers. As of the latest count, the e-commerce giant operates about a dozen grocery and convenience stores, with a couple dozen more in the works. That's in addition to more than 50 brick-and-mortar retail locations for its bookstores and other consumer-oriented products. More are on the way too, and in places where the company doesn't have a retail presence, it may soon see a localized distribution warehouse and drone-based deliveries. Amazon says it's planning to build on the order of 1,000 mini-fulfillment centers from coast to coast. So with those huge growth opportunities and the long consolidation of the Amazon stock in mind, it definitely makes sense to buy the shares now. Nevertheless, if you want to be more safe, you can still wait for the stock to write all-time highs again and buy the following upwards trend. Alright, with that being it for today's video, however, thank you very much for watching. If you like this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot and see you next time.